Hello traders, in this video I am going to share my 3 best trading techniques that I use in my trading which gives high probability of profits. Number 1. Trade based on PDH and PDL. PDH is previous day high and PDL is previous day low. I am going to show you with an example comparing 2 days. First we will take Monday. For Monday this is the chart. In this chart I am going to draw the highest point and the lowest point. So this is the highest point, this is called PDH, and this is the lowest point, this is called PDL, that is previous day high and previous day low. So we are going to take the trade on Tuesday by marking these levels. So on Tuesday we are going to take the trade, and how I take the trade after marking this level. So on Tuesday, so this is how the market moves. After it breaks the previous day high line, you have to give entry at this point. So at this, after giving entry at this point, that is upside entry, predicting that the market will go up. So the market will go like this. So this is one of the best techniques that I used for upside trade when the market breaks previous day high. Similarly with the case of downside, if the market breaks the PDL, you have to enter at the downside trade. So I am going to explain it with a real-time chart. Open your trading chart and fix the chart in 5 minutes time frame. After fixing it in a 5 minutes time frame, see, I am going to take trade on Monday. So before the market opens, I am going to mark the levels. So this is the highest point of the day, so I am going to mark this level. This is previous day high and this is previous day low. I mark this. So after the market opens, see here, the market breaks the previous day highest level after it went upside. So we have to give entry at this point and exit here. Now I am going to show you the trade for the downside, that is after the market breaks previous day low. So in this chart Wednesday, you have to mark the level. So this is the highest point, so this is previous day high, and this is the lowest point, previous day low. So you have to wait for the trade on Thursday. Market opens here and it goes downside. After breaking the previous day low, you have to give entry for the downside prediction. So the market moved downwards. So these two techniques are very favorite of mine because it have high probability when it breaks out. So here you should consider the closing price, not the shadows or wicks. You have to wait till the candle breaking the previous day low or high. And the technique number 2 is trade based on 20 simple moving average. I am going to explain it in a practical example. First thing you have to mark is the previous day high and previous day low. So I am going to take the trade here. So before the market opens here, you have to mark these levels. This is the highest point. So this is previous day high and this is lowest point. After marking this level, for this condition, the market should open above the previous day high. See here, this is the previous day high. The market is opened above. So after opening, the market goes higher or downside when it crosses the 20 SMA. When it closes below the 20 SMA. See here, the orange color curve is 20 simple moving average. When the candle closes below the 20 simple moving average, you have to give entry at this point, at this level. At this level you have to give entry. It is a massive fall. So this is a downside trade. You can trade as vice versa. If the market opens below the previous day low and it returns, it have to cross the 20 SMA, close price above the orange color 20 SMA. So you can go for upside trade. See here, this is previous day high, this is previous day low. See here, the market opens below the previous day low. See here, the market opens below the previous day low, and when it closes above the 20 simple moving average, the market rallied here. So this is upside trade. And the technique number 3 is trade based on 50 SMA. This is very a powerful technique. It will not occur frequently, so I am going to show how this technique works. See here, whenever the market opens high above the previous day high and crosses the 50 SMA, the blue color line is 50 SMA, it will be very heavier. See here, whenever it crosses, you can check. See here, when it crosses the 50 SMA, the fall was severe. The fall will be very severe. See here, it crosses 50 SMA, the fall will be very severe. It mostly occurs on the downside rather than upside. See here, when it crosses 50 SMA, it falls. It is very powerful on the downside rather than upside. See here, when it falls downside very severely. So these are the 3 best trading techniques that I mostly use in my trading days, and it gives me profit. So in upcoming videos I will come up with many more strategies. So do subscribe and like the channel, so that will encourage me to put some more videos on trading. Thank you.